I thought it would be appropriate to address the media on two topical matters, namely, firstly, the downgrades by the rating agencies, and secondly, to see if I could clarify some issues with respect to the implementation of the property tax. Let me deal with the ratings first. Trinidad and Tobago was placed on a negative outlook by Moody's in 2014-2015. And whenever one of the rating agencies places you on a negative outlook, they do an annual evaluation. So we've been on a negative outlook since then. We maintained our negative outlook in 2016 with a downgrade to the lowest level in the investment grade. And Moody's came, as they are required to do, to look at our situation in 2017. Standard & Poor's has the same approach, that whenever a sovereign nation is on a negative outlook, they do an annual review of the credit rating. When countries have a stable or a positive outlook, the ratings are not done so frequently. But because we have been on a negative outlook for some time, the two rating agencies did their annual evaluations this year. And they're normally done in the first half of the year, usually in the month of April. So both Standard & Poor's and Moody's came to Trinidad and Tobago. Standard & Poor's adjusted our outlook from negative to stable and lowered our rating from A- to BBB+. BBB+ is an investment grade rating and is still fairly high up in the table of investment grade ratings. The reason why Standard & Poor's rated Trinidad and Tobago as stable is that they are of the view that the Trinidad and Tobago economy will recover, based on a number of reasons, based significantly on the fiscal consolidation work being done by the new PNM administration since we came in. And in this context, fiscal consolidation means trying to bring the accounts into balance, trying to balance expenditure and income, so that the country has suffered a severe loss of income since 2014. In fact, we've lost about $20 billion in income. I don't think many people understand the significance of a $20 billion loss in income. The country's income up to a couple of years ago was $57 billion per year. It's now 37. So that we have to make up that gap, that $20 billion loss in income. Right? That is an annual $20 billion in a number of different ways. One of the ways would be to reduce expenditure by reducing subsidies and transfers and just generally controlling expenditure. Another way would be to borrow, including withdrawals from the stabilization fund. And another way would be one-off sale of assets, IPOs, and so on. Recovery of money from colonial life and that sort of thing. So that we have this huge gap to make up of $20 billion. It's a fantastic drop in income. If it was a company, its income went down by 40%. You could imagine what effect that would have on a company. So all of these rating agencies are looking at the huge reduction in income in Trinidad and Tobago and looking at what the government is doing. So Standard & Poor's looked at what we were doing, looked at our fiscal consolidation work to reduce expenditure and increase revenue, and looked at what we're doing, especially in the energy sector, in terms of seeking to get new supplies of natural gas, which is the main driver of our economy, through arrangements in Venezuela and also arrangements with the major oil and gas companies like Shell, BP, and so on. And they were satisfied that the work the government is doing and the prospects for economic recovery were such that they could upgrade our outlook from negative to stable. But they lowered our rating from A minus to triple B plus simply because of the significant fall in revenue, the loss of $20 billion. Moody's, which is a more conservative rating agency, had already downgraded Trinidad and Tobago to the lowest level in the investment grade table. Moody's looked at the same things that Standard & Poor's looked at. Moody's had a slightly different view to Standard & Poor's. They felt that if the government of Trinidad and Tobago did not slash expenditure further from what we've already done, we've cut expenditure by $10 billion per year, but Moody's was of the view that we should slash expenditure even more. And they felt that because we had not done that, that they would want to give us a BA1 rating, which is at the top of the next level. So we are at the bottom of the investment grade with Moody's, have now put us at the top of the next level in the table. Moody's also converted our outlook from negative to stable. Now, there are three big rating agencies in this part of the world. Standard & Poor's, which controls about 50% of ratings, Moody's, which controls about 35% of ratings, and Fitch, which controls about 15% of ratings. They are called the big three. And for some time now, I have been advised to take a look at whether we should now pursue a rating by all three of the large rating agencies. That is to say that we would now ask Fitch to rate Trinidad and Tobago. Because with respect to the Moody's downgrade, there is a view out there, if you read some of the commentary, that the Moody's downgrade was a bit unreasonable. When you look at the Standard & Poor's rating, which has us well up into the investment grade. So I have been advised, and I think this is good advice, that we should also pursue ratings from Fitch. So we'd have the three largest and most reputable credit rating agencies in the world rating Trinidad and Tobago so that investors could get a more balanced perspective on our ratings. And I'll answer any questions that you may wish to ask me on the ratings in a short while. I'd like to move on now to property tax. With respect to property tax, the Ministry of Finance will be rolling out a communications plan starting from tomorrow, where officials of the ministry will be making themselves available to the media to answer any questions and to deal with any issues and clarify any matters that are required to be clarified. As Minister, I just want to clarify one significant issue. There are two pieces of legislation that govern properties and taxation of properties in Trinidad and Tobago. One is called the Valuation of Land Act, which has been in existence for a very long time. And the second one is the Property Tax Act, which is a law that came into place in 2009, 2010 to replace the Land and Building Taxes Act. The current initiative, which is requesting property owners to return a form, in other words, file a return of their property, giving details of the address, the purpose it is being used for, the number of rooms, and an estimate of the value, flows from the Valuation of Land Act. It is not an initiative that comes from the Property Tax Act. It's a precursor to the actual valuation itself. So in the Valuation of Land Act, property owners are required by law to file a return. And when this adjustment was made, it was made in 2009, and the first return was required in 2010. And then the law said that this would be reviewed every 5 years. So another return was due more or less in 2015. So the Valuation of Land Act asks property owners, file a return and let us know who you are, where the property is, what type of property it is, what's its size in terms of the number of rooms, and what is your estimate of its rental value. That document is then to be used by the valuations division of the Ministry of Finance to put a final assessment value on the rental, because when the valuation division processes these forms, it will look at them. In many cases, there will already be an assessment number. The property will already be on the system. In some cases, properties will not be on the system. So the purpose of the forms is to assist the valuation department to put a value on properties, which is then going to be inserted on a notice, which is then sent to property owners, telling them what the assessed rental value of the properties is, and informing them of the requirement then to pay the property tax, which would be, in this case, the first instance, 3% of the assessed rental value. So that the initiative that is in progress right now is a precursor to the actual assessment notice that property owners will receive, telling them what is the assessed rental value of their property and what is the tax that they have to pay.